What's up, everybody? Welcome to the Stocks channel. Today, the market continues to climb higher on the backs of very bullish tech stocks like Nvidia. With tomorrow's inflation data, will we continue to rocket higher, or will we start to drill down to lower prices? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was up 0.57%, and we did break through that resistance at 475. And once again, I want to remind you, the last couple of nights I've been telling you don't short Nvidia stock, and it's likely going much higher. And today we're getting another bull breakout and another big tech name with Meta, which is now also breaking out. And if you look at that chart, it is also very close to trying to break out to brand new all-time highs, and so is the stock Microsoft. So if you do not believe the market can go higher, imagine if Apple and Google and Amazon and all of these other major top 10 names also start to break out and push towards brand new all-time highs. You can very easily see, objectively following technical analysis, how the market can and probably will continue to climb higher. Now, tomorrow is CPI data, and anything is possible, including a simple flat day. And even though we like to hype up that we're going to have a major big move, today could have been the move and tomorrow could just be flat. However, as I continue to remind you, the chart cannot lie to you. And right now, if we look at this chart, we have a bull trend with price action trying to break out and continuing to break through resistance. I told you that 475 would be a level to pay attention to, and I drew two arrows, and I told you above 475, we were likely pushing higher into the 480s, and we are currently above 475. Now, when we break through 475, that now becomes a risk level, or just use the rising 20 daily moving average at 472, and that will continue to go up each and every day. So we are getting very close to brand new all-time highs in the S&P 500, and that is likely where we're headed because we already know we have the brand new all-time highs in the Dow Jones and the Nasdaq 100, and the S&P 500 is likely just playing catch up. Also, pay attention to those small caps, which I'll talk about when we get to the Russell 2000. But we do have a lot of bull trends across the board, and we're starting to get very bullish breakouts on some very big market moving names. Now, if at any point we get rejected from any of these resistance levels and break the critical support, then we can start to get more bearish, but the critical support isn't until we get all the way down there at 467. Remember, critical support doesn't mean you manage your risk from there. It simply means that's how we know we're going lower. You should be managing your risk from these higher levels up here right around 472 and 475. Remember, you are a retailer. You can get in and out of your positions at the drop of a hat and the click of a button. You are not a major big money player that has to take days or weeks to position themselves. You can move like water and you can flow in and out of your positions. So that's why I always tell you to follow the price action. If you follow the price action and you move like water, you should be in and out of your positions instantly as soon as the chart tells you to. Right now, the chart is telling us that we're likely going higher, which means we're likely going higher, and it's just as simple as that. On the Nasdaq 100 triple Qs, we were up 0.68% today, and we blasted right through that gap fill above 407, and I told you above 404, that's likely where we were going. Now that we've filled that gap, the bears can no longer use that open gap as a resistance level, which means as long as we continue to close above 404, we're likely heading higher to a brand new all-time high. A brand new all-time high would likely take us to 414 and then 420, and that does look like where we're going as long as we're above this breakout at 404. The critical risk level is all the way down here at 396, and that's also going to be right around where that 50 EMA is going to be because it's a moving average that continues to climb higher. So we're only risk off if we break down below 396, and we can also manage our risk right here at 404, and we're likely heading towards 414 and then 420. Again, I talked about Meta, and I talked about Nvidia, and I talked about Microsoft. Now just imagine the other names like Google and Amazon and stocks like Tesla start moving higher as well. You can easily see how the Nasdaq 100 is going to remain bullish. So do not fight the trend. The trend is your friend until the end, and the trend in the triple Qs is still very bullish. On the Dow Jones, we were up 0.47% today, and we're pushing right on top of the previous closing all-time high, which is this level at 377. And if we break through 377 with this Bollinger Band squeeze, it's likely we're going to push to brand new all-time highs into the 380s. The Dow Jones is very simple. Just stay bullish above 374, and if we break below 374, we're likely coming down towards this critical support zone right around 370. As long as we're above all of this support, it's likely the bull trend is going to push the price action higher. So as I continue to tell you, it is really that simple. There is no need to overcomplicate it, and you are a retailer who can easily manage your risk around these critical support zones. On the Russell 2000 IWM ETF, we were up 0.06% today, and the price action is still below the 5 EMA. So tomorrow, with the data release of the CPI, we should get a catalyst to push us higher. And I do believe we're going to blast right through this gap fill at 198 and likely pushing higher towards 200 and 203. Above that, we go to 207, and then above that, we go up here towards 214. So you can stay bullish in the small caps as long as we're above this support right around 193 to 190. And we have a lot of support in the small caps because we also have the 50 EMA and support trendline right around 189. So there is a ton of support here. The bulls are likely going to take on risk, and we're likely going to see the small caps pushing higher. On the ARKK ETF, we were down 0.3% today, getting rejected below that 5 EMA yet again, but we're staying bullish as long as we're above 48 and this 50 EMA right around 47.5. If we lose that support, then we could get more bearish for a push down towards 44 to 45. A push higher needs to break the resistance at 51, and we'll likely test 51, and if we break through it, we go higher towards 52.3 and 54.6. On the VIX, we were down 0.7% today as the VIX continues to make new lows, which tells us fear is leaving the market, and if fear is leaving the market, that tells us the market's likely going higher, and there's just not enough panic sellers to push the market lower. If at any point the VIX spikes and we break this high right around 14.4, then we can get a lot more risk off, because that likely means we're going to get some type of high volume panic selling, but right now we just don't see it, and right now we see fear leaving the market. On Bitcoin, we're currently down about 0.8% with that continued rejection from that price target, which was the price target I drew the arrow to. And I do believe there's a possibility of a sell the news event with this ETF news that's coming out. And a lot of people are just going to assume the news is overly bullish and it means Bitcoin has to go higher. And while that is a possibility, you have to remember there is nothing new about this news, and the market has known about this news, and it's likely have already priced it in. Now, priced it in means that it's likely just going to be a sell the news event. And if we do sell the news and if people are over leveraged, we could get a flash crash. And I know it's a bold prediction or a bold call out, but it's definitely something you should be aware of, that if Bitcoin does get a sharp rejection, we could come all the way back down to 38,000 in a hurry. So I'll leave it on here as just a possibility so that you at least take it seriously. And the only way I would get a lot more bullish is if we can't break down through this support at 44,500. And if we break out to a brand new high and start to squeeze out any short sellers, that would be above 47,500. So as always, I'll give you both arrows, and the bull arrow would likely take us to 50,000 on that bull breakout above resistance, and we can delete the old arrow because we've already hit the price target. So there you go. That's the level to pay attention to in the two possible scenarios I see around the corner. And as always, let the price action tell you which scenario is playing out, because obviously the market couldn't care less what I think. On Nvidia stock, we were up 2.28% today, and I continue to tell you this stock is not worth shorting, and this stock continues to break out and close at brand new all-time highs, and that's exactly what it did today. We're very close to my price target now, which you can very clearly see. I drew the arrow up here into the 550s, and if you really say we haven't hit that price target, yeah, you could be right, but that's damn close enough to me. And again, that doesn't mean we're going to stop at 550. This is just an arrow some guy drew on a chart, and it doesn't mean we can't go higher. I still think it's very possible we push higher towards 600. But I'm not going to get you over pumped up and overly excited. That's the target that I see, and if we break through it, then you can get a little more optimistic that maybe I'm wrong and we are going higher towards 600 now rather than later. At the end of the day, you need to be bullish in this stock, or you need to get the hell out of its way, because it's a bullish freight train and it's going to destroy your portfolio if you continue to try to short it. On any pullback, look for that Bollinger Band and support zone right around 432, and then below that I would watch the 5 EMA. On Tesla stock, we were down 0.43% today, and Tesla is finally reaching that 200 daily moving average, which is a rising support. So it is possible we are going to find support right around 230, but I still think below 244 there's a good chance we're going to fill this gap at 225. There's nothing special about gap fills, and there's no guarantee this gap will fill. I simply think it's a good chance while we're below 244. If you don't want to get cute and you don't mind buying a little early, then go ahead and start adding some here, knowing that if we go lower, you need to probably look to buy more at 225 or down here right around 215. I'm going to be getting a lot more bullish if we can break above 244, and then above 244, I'll be looking for 255 and higher. On Apple stock, we were up 0.57% today, and Apple is one of those stocks that I've told you to pay attention to because it's likely pushing higher. And with Microsoft breaking out very close to a brand new all-time high, and we now have Meta and Nvidia continuing to push higher, it's very likely Apple is just lagging behind. If Apple pushes higher towards my price target right around 192, just imagine what the triple Qs are going to do as well. So again, I can't caution you enough against getting overly bearish while we're in bull trends. Apple is bullish above 180 and stay bullish above 180, and you can also watch the support levels at 182 and 185. Look for upside resistance very soon here right around 188 and the gap fill just below 192. So jumping back over to the S&P 500, I know there's a lot of hype about CPI data, and I even use the words we're either going to rocket or drill, but there is the possibility it's just a very neutral flat day as the market digests some gains and gets ready to push higher towards brand new all-time highs. There's nothing that I can see bearish on the chart just yet, so I really don't understand why so many people are trying to short the market or getting ahead of shorting. If we're going to short the market, we need some proof from the price action that the trend is weakening, and then we're going lower, and then we can short like the wind. But right now, we have a bull trend with bullish price action, so be patient, stay on the bull while it's still bucking, and if the bull bucks us off, then we'll adapt accordingly and manage our risk around these critical levels. We are going to absolutely crush the market this year in 2024, and we are already crushing the market in 2024, and this is going to be a very great trading year. If you want to come crush the market with us, consider joining Bank Trade Alerts. And Bank will send you all of your buy and sell alerts via email and text message, and you can find out how to join by clicking on the link below. If you want access to all of my intraday updates and analysis, then you need to be in the Stocks Channel Discord server, and you can also find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.